Good morning, everyone. Welcome to our Friday morning trading session. My apologies, I almost forgot to open up the room this morning. I knew there was something I was forgetting. All right, so here we are, Friday, and kind of a slightly bearish session yesterday in that we saw prices fall off toward the end of the morning, and then they just went sideways. So lots of sideways trading. The buyers never able to fully recover the session, and that's kind of significant. That suggests a slightly bearish tilt to the market this morning. Maybe. We'll see how things unfold. We're only a couple minutes into the session. And a reminder for those of you maybe not familiar with the North American market schedule, Monday is a holiday. There will be no trading on Monday, so no trading room on Monday. Unless you just wanted to get together and hang out for a little bit. I'm kidding, of course. There's nothing to talk about. So we will resume on Tuesday. All right. You can see market a little conflicted here on the Hawk, for instance. Got a little bit of a jumbled mess. Working a possible first micro-macro cross higher just off of the opening bell. The Falcon also right out of the open trying to give us a late filter entry buy. Now, with the Falcon, of course, the late filter entry signal occurs when the filter goes out of sync, comes back into sync. However, the trend line never changes color. This tends to be a very high probability signal for us. However, it did print either right on the open or maybe a minute or so before the open. So I'm not always that keen on jumping on the opening buzzer. This is interesting, however. Here is the eagle with our first in-sync signal of the day. And let me set up, and then I'm going to explain what I'm doing here. So what we have here on the eagle is a green bar sell. We may have a slightly sideways market, in which case we anticipate selling to occur kind of in the top third of the market and buying to occur down here in the bottom third. These are just approximations, of course. We have had a lower swing high relative to the others. So you remember how I told you whoever controls the last swing controls the market? Well, right now, at this point anyways, the sellers have control of the market. This is a green bar sell signal off of the hard edge. We have an opportunity for a second push on the entry. It is not, however, in sync with the ATR. That's the squiggly red and blue line you see here. Normally, we use that as a filter. However, if I were to wait for the market to actually take out the ATR at this point, I would be fairly close to the lows before I even got my entry. So what I did is I leaned on the second push opportunity, and I placed my entry below that as my signal bar. And you can see that, fortunately, the market never made another attempt to push lower, so I never got filled. And now it's retreating from my entry, so I can actually close out that order. But the reason I did not wait for the ATR to come into sync was I would have ended up entering down here somewhere, almost halfway to my profit objective. So I thought it was a better strategy to try to enter a little bit early. Than to wait for everything to come into sync. Okay, here we're getting a little bit of a cloud crossover signal as well here in the Raptors. So we're getting the reverse now. It's almost as though the market didn't want to move to the short side out of the open, so now they're going to try the long side. Now this isn't a pure cloud crossover yet because our hard edge hasn't formed, and you can see now we're printing a cloud crossover signal. It printed right there. Now we're getting the warning. So this is why it's important for you to be able to recognize these signals as well as they start building. Because sometimes the way the programming is designed, it's designed to give you as much warning as possible, but occasionally things just kind of trickle together. Better make a note in my journal. Alright, so February 17 already. And 6:39, we're a little early. Not too terribly early, but still a very early session. Just making a few notes here in my journal. Come on, let's go. Oh, David asks, Eric, my Raptor filter is still magenta, but yours is blue. You know what, David? I probably haven't reset my filter again to the 12 tick default. That might account for it. All right, what's up with you guys here? Come on. so I'm rolling my stops in a little. Just because this hesitation, we should have seen a little better follow through on this breakout. After all, 5,300, you know there's going to be some selling going on here, sure, but we should have tripped up some of those sellers and taken out their exit orders. There we go. Come on. Stay on the other side of 5,300, you so-and-sos. Wow. Get up there. Okay, well, that's a little better. We're getting a little bit of a bullish push. Okay, we're about to hit the break even. Hooray for us. Oh, don't stall now. Come on, keep going. Oh, you guys and girls. You're killing me here. Let's go. There we go. All right. Oh, yeah. I forgot they slipped us a tick on the entry. I forgot to adjust that. Oh, well. Looks like it might have been a blessing in disguise because that's it for this bar anyways. We might have tapped out on the high of that little move. Solid signals across the board on our other tools. I suppose I could have doubled up. That first micro macro cross right here out of the open, again, not my favorite signal to take right on that opening bell. But it did work out. In fact, it worked itself into well, in this case, we only had a 3-arrow consolidation, but it's important to remember it's that shape that we're looking for. We're looking for that consolidation style pattern. And with the NASDAQ and most markets, we'll usually get 4 signals. In this case, we only got 3. So this is a little bit more characteristic of a market like crude oil or gold even. And then we came back with yet another first micro-macro cross signal right here. I know you're looking at that and saying, "No, wait a minute, Eric, those trend lines didn't cross." That is true. However, you need to remember what the first micro-macro cross is showing you. It's showing you a market that goes out of sync and then comes back into sync. So we had a first micro-macro cross occur right here. This is true to the name, where it's the first in sync signal that forms after the micro line and macro lines cross over. However, you're going to notice that shortly after this one formed, everything went out of sync again. So we had bar colors out of sync, we had trend lines out of sync, and our filter went out of sync. And then that was followed by everything coming back into sync again. So we got back-to-back first micro-macro cross signals, and fortunately both of those worked out, regardless of which one you chose to take. The late filter entry signal here on the open was followed by yet another late filter entry signal. This was the one that's synced up with our Raptor trade, actually. So you had a couple opportunities to get on board here. And I think we're still working the eagle signal, which would have been this signal right here, the first in sync signal. So we made it about halfway to our profit objective. If you did take this eagle signal, I think I might be taking this trade to break even, or just stop out with profit. They do seem to be struggling a little bit here at a moment, and that's due to this resistance right here. Yesterday's afternoon high. The market is trying to poke through there, but so far they are unsuccessful staying above there. So far. All right, getting another little bullish push here. You can see we got some green bars forming, some bullish bars. Because it is a Friday before a holiday weekend, I'm always a little suspicious of how the day is going to unfold. By that I mean a lot of traders get busy early, and then the afternoon session just kind of falls flat. That was certainly the case yesterday. Pardon me. So it looks like the market currently currently topping out at 53.06. And if we are still in a sideways range, this would be the spot where the sellers are going to start selling from. Kind of in the top third, top quarter, and buyers getting busy down here. Oh, way to go, Tony. Tony knocking it out of the park. Loading up, he says, I went long in all four instruments, all four birds in that little last rally. 4 figures, now just watching. Great business. Way to go, Tony. My hat's off to you. That's a great trade. Here's something to keep a lookout for. You know, when you encounter a resistance area like this, the market breaks through and it can't stay above it, and we're probably going to see a little bit of a reversal. Down here, we got the same kind of thing going on. You see, this was the initial support. We broke through and then recovered. Broke through, recovered. Broke through, recovered. Broke through, recovered. That tells you there's some serious resistance to the market going lower. Let's see if I can find another example. See, this is what it's supposed to do. Oh, let's go back here. The market breaks through, retests, and shows you that it can stay out. See, this is practically textbook here. If it had broken and then failed, got back in here, then there's a pretty good chance prices would have gone back to test the bottom end of the trading range. And that seems to be what is happening here this morning. At least to start. So if they come back now with another buy signal, you know, if they do the opposite of what we saw here, so they broke through, we know there's active selling everywhere from 53.04 to 53.06. The sellers push them down. Now if the buyers come back and produce a buy signal, well, that might be worth a buying attempt. Here we have a macro pullback signal, again near the top end of that trading range. I haven't really got a feel for whether we're in a trading range or whether we're trying to rally. I might throw a single on here. Just take it above the high, cover it down there. This is risky, folks. You know, trying to buy in at the top end of the trading range. There's no question that's risky. And they slipped me another tick. You stinkers. All right, I'm going to open that up and we'll see whether or not. Oh, and it's near the top of the hour too. Bad timing maybe on my part. Haven't decided yet whether it's a good idea to leave the break even in or not. I guess I better decide pretty quick. I guess I can always manually take the trade to break even, so I will open that up. Come on. So what I'm looking for now is the market to break 53.06 because that's obviously where the sellers dug their heels in. If we can break and close above 53.06, we might get a little traction, as we could see the market take out some of those sellers exit orders. Okay, there we are, 06, there we go. We got a little bit of a boost as we hit some sell orders. There we go. The sellers exit orders, of course, would be buy orders. All right, I think that's far enough along. I can take this trade to break even. Careful not to hit the close button, although that would not be too terrible. We've certainly hit our high probability profit objective, or we did hit it. Oh, pardon me, it's $50. So yes, we're well past our profit objective, and now I'm just trying to see if I can't run this out a little bit higher. Maybe I'll use the parabolics. I'm kind of fond of the parabolics. Come on. Doggone it, those sellers. Come on, here, we'll give you a little help, a little push with the mouse. Get up there. Come on, get up there. Ah, yes, stickers. All right, well, I was a little bit quick, I suppose, on the break even, but it happens. See, there's a case for being all in, all out. You got a break even tag out. Could have just taken the money. Gonna make a note of that in my journal. Put a big star beside it. Well, yeah, now they're going to come back and rally a little more. Sure, why not? Well, they're conflicted. You know, we should have seen a little more follow through on that breakout, but here they are trying to knock them down again. Daniel asking about this eagle signal that just printed. He says the eagle printed a signal after you got out. What would that be? Well, this is actually not one of our high probability signals that we tend to look for. And I haven't reviewed the Eagle signals in a while, and it looks like we're just going to be thrashing about for a little bit, so a good opportunity to do that. All right, so as far as your Eagle goes, we tend to focus on the trading band, right? We're going to look at signals, for the most part, that are in sync with our trading band. With the Eagle, our highest probability signals tend to occur near the hard edge. When the market drifts into the hard edge, we anticipate some sort of reaction. When the market is in an uptrend, we're going to look for what we call a red bar buy. So what happens is the market drifts so deep that it actually starts to change some of the parameters of the chart, and all of a sudden we start printing red bars. And it's almost like printing these red bars all of a sudden wakes up the buyers, and they say, uh-oh, if we're going to hold this trend, we'd better get busy and we'd better start buying the market up. And then they come back with a buy signal. So we have red bars and a green buy signal. That's called a red bar buy, and that tends to be a high probability signal. Now, I should point out that the red bar buy and its inverse, the green bar sell, tend to print when the market is already in trend. So it's more of a continuation signal, although sometimes you'll see it develop early on. But generally speaking, it's going to develop when a trend is already in play. This is our first in sync signal, or our trend change signal, I should say. This one developed a little bit late. Let me go back here to where the trend actually started, and you'll see what it usually looks like. Okay, it usually looks like this, where our trading band, it's either flip-flopping or it's come from a downtrend and it changes into an uptrend. It's the first signal that prints when a band flips over. Now, a lot of times, this is going to be like our cloud crossover signal in the Raptor. A lot of times, we're going to see a little bit of a pullback and that signal print. But at any rate, you could have seen it as this signal here, or as this signal here, or if you're waiting for everything to sync up, even this signal right here. And they're all in the same neighborhood, so it really doesn't matter. If I go back here to this one, this would also be the trend change signal. All right, so those are your first two signals. You've got the trend change signal, you have the red bar buy, and in a downtrend it would be a green bar sell. And then when the market starts to reverse, I'm going to have to go back a long ways. Oh, you know what I'll do? I will show you. Come on. Here we go. I haven't done this one up yet, but it's the first time in a long time that I actually had all three signals print on the same chart. So here's the trend change signal. Here is a green bar sell signal. Again, it occurs off of the hard edge and when the market is in trend. We have another trend change signal right here. And you can see both these signals were preceded by a slight pullback. The counter trend signal for the Eagle is what we call the rule of three. And the rule of three says that, in this case, we have a bullish band. When we have a bullish band and the market starts printing signals, counter trend signals, on the other side of the band. So we have 1, 2, 3 signals that have printed counter to the trading band. When that happens, we anticipate the market to move on that third signal. Now, there's nothing magical about the 3 signals themselves. Sometimes your rule of 3 will develop into a rule of 4. Occasionally, you will only get a rule of 2. But there are 2 things that are critical for your rule of 3 signal to work. First, you have to have a trend. Obviously, without a trend, you cannot have a counter trend. So you need to have something that resembles a trend, and then you need to have a test of the extreme and a failure. So in this instance, we actually had 2 retests of the extreme, each one subsequently lower, suggesting that the buyers were losing their grip on the market. When this third signal printed, then that was your cue that you could start to sell short. All right, so there's a rule of 3 signal. The NASDAQ has been rallying so strongly for the last week and a half that we really haven't had any counter trend signals of any sort. Now, added to that, thanks to Russell, one of our DTS members and owners, he observed that the first in-sync signal of the day tends to have some very good follow-through to it. So here was the signal from a couple of days ago. Where's the market open? At one. See, now this signal is the first signal that printed, but it's not in sync, is it? It's against the band. It's against the ATR. I suppose this would be here, your first in sync signal. And you can see it took a little heat on it, but still very, very good follow through. Okay. Here's the first in sync signal. Very, very late in the session. I probably would have ignored that one. Here's the first in sync signal. You can see good follow through. Anyways, you get the idea. You can do this exercise on your own. Go through your chart, find that first eagle signal where everything is in sync, and see what kind of follow through you get. And as Russell observed, it works out really well. So I've been doing that a little bit myself, actually, just getting on board that first in sync signal. Here it would be for this morning, that one right there. And we're not quite to the profit target yet, but certainly far enough along that we can either hop out with profit or at the very least roll this trade to break even, hope for the best. So there's another one you can add to your Eagle arsenal. But to answer your question, Daniel, this signal here does not really fall into any of the other categories. Same would be true for this mess through here. Not really, those signals don't really fall into our high probability category. If we saw the market retrace here a little bit, perhaps get to the hard edge, come out with a red bar buy signal, or even just a basic hard edge bounce. That's the one I didn't get to either. Occasionally the market will drift into the hard edge without actually going as far as becoming a red bar. A hard edge bounce is an acceptable signal as well. Let's see if I can find you one. All these have been red bar buys. Well, I guess that's pretty close right here. Certainly close enough. We don't want to be splitting hairs here. Remember, this hard edge, it only exists on your computer. It's not really there at the NASDAQ. So if it comes up a tick or two short, don't negate the signal just because it's a little bit short or even a little bit over. All right, the buyer's making another press. There they go. So it looks like this morning signal, the first in sync signal, also about to find its profit objective. Well, that was unfortunate. We were on the right side of the market. A little bit of a hiccup took us out at break even, and it did go on to rally a little bit more. It happens. It's easy in hindsight to say I would have left my stops back, but in practice, the market was flip-flopping a little bit, and I did not feel like waiting for it. I guess I should have been a little bit more patient with my stops. Well, like I say, easy to say in hindsight. So now we're trading into our secondary resistance zone. Our Falcon filter starting to break up a little bit. Oh, hey Russell, we were just talking about you. a good way. Russell says, I missed the first 40 minutes. What trade did you take? Well, I was just highlighting. I didn't take it. I should have. I was just highlighting the first in sync Eagle trade here. And it looks like, oh, I thought we made the profit target. We're just a tick shy of our profit objective. So there was a decent trade. The trade I took was here on the Raptor. I took the number one signal, the cloud crossover signal, and we took profit on target. And then the second signal I tried was here on the Hawk, the macro pullback signal, and we were doing well. We got I tried to run it out. I should have just taken profit when I had it. But the market gave us a little bit of a hiccup and took me out of break even. And then they recovered off of the low and put in another little bit of a rally. Floyd's watching the 6E, the euro. He says it just made a nice move. The euro is a good market to follow. It does have some good follow through. And there goes the NASDAQ. Now we're just kind of on hold. The market is so slow, I'm starting to question whether or not we're going to see another signal here this morning or not. Just watching and waiting. Gold slipping a little bit lower. It's a little late on this opportunity, but it was a solid trade all the same. Looked a little bit messy as it was unfolding. We got a reversal signal here, the soft edge buy. Honestly, it was tough to see because the market had been so sideways, so congested. But the one that I liked is this one right here, the number 1 signal, the cloud crossover signal, which seemed to have printed as the market emerged this sideways range. But as I said, I spotted that a little bit too late. I was already underway with my NASDAQ trade, but prices trickling a little lower. Yeah, everything's just kind of dried up right now. Like I said, it's making me wonder. Well, I wish there was something else to talk about, but there isn't. Just gotta wait it out. We might get a number 2 signal forming here. That would be our soft edge sell. We're still a long ways away from that. But the market not as bullish as it was. But we have hit our targets across the board, so successful trades all around. And of course, you can only take what the market is giving, so no point in trying to force something to happen. Ah, and now here is a very interesting question. Jeff asks, have you played any of the golf courses down in Whatcom County? Excellent question, Jeff. And you have some beautiful courses in Whatcom, and I haven't played nearly enough of them. Part of the problem is being on Vancouver Island. It's always a little bit of a hassle to get off the island onto the mainland. I did play South Bellingham a few years back, and just an incredible course. We have friends who are prolific gamblers who like to frequent the casinos in northern Washington state, and they'll usually take their golf clubs along with them. So they've played a few more of the courses than I have, but no, you've got some terrific golf courses down there. What I remember most about the South Bellingham course was that the rough was like steel wool. Oh my gosh, it was like 2 inches tall and just grabbed your golf ball. Good luck getting it out of there. Oh, wow, way to go, Steve. Steve says, interesting. He says, I'm in San Francisco, but a Canadian citizen from Calgary. My son is pre-med at UVic. Well, you must be very proud. Yeah, Steve says, I'll meet you for a pint. Okay. I could be persuaded to do that. Tony, back to trading. Tony, all business. Just teasing Tony. Tony asks, I just built a 6E chart, got a message, logic counter will not work on current chart. Any ideas? Okay, you are running a mean Renko bar, are you not? If you are and you get the error message, just try this. Go to your indicator, uninstall the logic counter, so you just remove it. I have a tendency to click apply. They tell me you don't need to, but I do anyway. And then go find your logic counter again and put it back on, wherever it is. There it is. So double click it so it ends up in your assortment, and then that should solve the problem. Oh, well, here we are. Um, the market looking a little top heavy, and I'm not just saying that, but we're drifting back into yellow bars here on the Hawk. Filter starting to break up a little bit here on the Falcon. Just lack of momentum, really. If there's one good thing about day trading, it's that you get a visual of the momentum. You get a feel for which way the market might be trying to go. Uh, uh, Good question here from Peter. Peter says, "Hey Eric, I'm planning on moving to Calgary because I find I'm up at 6 a.m. and I'm up for trading. Currently, I have to wait until 9:30 as I now live in Toronto." And yes, there is a question in here. Do you find yourself mentally better at a certain time of the day? Well, doctors tell us we're sharpest the first few hours after we wake. I don't know if that's true or not. I'm not what you would classify as a morning person. Here on the West Coast, the markets open at 6:30 a.m. my time. Everybody thinks I get up at 5:30. I don't. I drag my butt out of bed about a half an hour before the market open. That's the best I can muster. If I were up at 5:30, it would not be pretty. I think it depends on the individual, Peter, but according to science, anyways, according to doctors, they say that we're sharpest the first few hours after we wake. I actually read an interesting article where the author suggested we should have afternoon naps for that reason, because you get a little dull after working for 4 or 5 hours. You have a quick little nap, you're refreshed, and then you're sharp again toward the end of the day. I think you just like taking naps, and hey, I'm not knocking an afternoon nap, but that was the logic behind it all. But I know another trader who worked night shift his entire career, and he trades at night. He's down in Arizona. He trades the European sessions because that would be nighttime in Phoenix. But it's an interesting thought, Peter. Calgary's a nice city. It's not as big as Toronto, of course. You're going to be a little bit more removed from the water. Toronto, of course, near the Great Lakes and stuff. But I guess it swings both ways. In the summer, you get that terrible humidity, and in the winter, you get what they call it, lake snow. So you kind of get nailed both ways. Yeah, and Tony says free pancakes at the Stampede. All the more reason. Yeah, Calgary's a pretty city. The foothills of the Rockies. Oh, speaking of golf courses, they've got some beautiful courses around Calgary, and if you go up toward Kananaskis, you can play up in the Rockies. Had friends around Cochrane, famous for their ice cream. All right, so I'm really starting to think maybe a top is in. We're getting something resembling a test of the extreme here on the Raptor now. If we get a failure and a sell signal, this could be a soft edge sell. And we just might see the market try to drift back here toward the hard edge. But they are taking their time. See you, Jeff. Have yourself a nice weekend as well. Um, I think if things don't shape up here pretty quick, we're going to button up shop also. This does tend to happen toward holiday weekends where the markets just start to get really, really thin. As traders zero out their positions before the weekend. That current bar working on a little over 200 contracts. Ooh, 631, that's nothing. 3,400 contracts, but that bar took about 10 minutes to build. Only 400 contracts there. So, yeah, it does seem like the volume not really there, and that would account for the lack of follow-through. Yeah, no trading Monday on Steve. All right, how's that? Was I sitting on my mute button? No, there's no trading on Monday. See you, Peter. All right, gang, I think we're going to button up the shop here for the week. Have yourselves a nice holiday weekend, and we'll see you on Tuesday next week. If you are going to hang out, I think we're going to see a little bit of a dip in the NASDAQ here, but don't go too crazy. All right, boys and girls, see you Tuesday. Bye for now.